What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is January 25th of 2019. Well, folks, I hope you all are having a great day wherever you are, and today we've got a wide range of different topics to discuss for both crypto and traditional markets. For crypto, we've got to talk about the big headline story, and that is the recent launch of the anticipated exchange tZero, which is being headed up by a lot of the team over at Overstock.com, one of the first e-commerce websites that accepted Bitcoin, as well as being headed up by the CEO of the company, Patrick Byrne. So we're going to be talking about the excitement around that and a potential opportunity that I'm watching. But outside of that, for traditional markets, there's been some very interesting news out of Singapore. There was a $41 billion flash crash in the Singapore Stock Exchange. Most of it was recovered quite instantly, but very interesting. So we've got to talk a little bit about that later on. We've been seeing more of these flash crash styled events in Asian exchanges. So without further ado, we're going to go ahead and dive into the video, guys. We got lots to discuss, so let's not push it off any longer. All right, so taking a look here over cryptocurrency markets, things are relatively neutral. Market cap has not moved, as we'll take a look at in just a minute. There's definitely been a separation of winners and losers this week. A lot of the big winners, though, however, are on the lower market cap range outside of some plays like Tron and Litecoin. But for the most part, we're not seeing any big moves in the sense of the past 24 hours, right? It's relatively neutral. There's no trend. As Bitcoin's pushing sideways, altcoins will follow. You guys know the general game. So we can see here, again, market cap since back in early January, still relatively stagnant, slowly moving downward, but still holding at about 50% of the gains that we got from the bottom of the market. We can see here as well, Bitcoin dominance still relatively flat. Again, as I keep pointing out, guys, the interesting thing to watch here is the growth of other coin dominance. We have about a little bit less than a 2% increase here since November, and it hasn't been declining as Bitcoin dominance has started to make lower highs. So very interesting to watch that. You want to see a breakout as we get slowly closer towards an upward range in the mid 20% range, and as you start to see Bitcoin dominance breaking below 50%. So that's the signal for us to get a little bit more on the risk-taking side in the short term. But right now, not feeling the confidence right now in crypto markets. I understand, guys, it's slow and boring, but I'm not going to try to encourage you guys to get any more active in this market when we've got declining volume and prices moving sideways, right? So the simple analysis that I can say for crypto markets right now, I'm not doing any crazy TA or any price predictions. One thing I am looking forward to, though, is a break on volume. Now, you can look across most exchanges. I'm looking at Coinbase right now. It's very hard to kind of aggregate all the volume and the price. I mean, there's really no way to get a price estimate or average unless you're using indexes that weigh that like BitMEX does. But I'm more than anything looking for a solid breakout on the majority of exchanges past this descending line of volume here, getting some buy-side volume, if anything. If it's sell-side volume, I'm looking and waiting until it goes down here back to the lows that we previously saw. But if it's starting to be buying action, we get above the 50-day, might be interesting to see if it can test above this line of resistance. But again, not trading anything. That's just what I'm watching for right now. I'm waiting for that big volume break, and we'll have to see what direction it picks up. Once it determines that direction, I think it's going to continue for the next 2 or 3 days afterwards. And if it were to be on the upside, you want to hope for this to get above this line of resistance and make support out of it, because the next point it's going to try is the 100-day that's coming downward at the moment. Outside of that, though, I'll be honest, I think it's probably likely that this is going to roll back down and test these lows. So, again, playing devil's advocate in this case, I'm thinking we're probably going to see probably the latter of the two. All right, let's go ahead, skip on really doing any TA right now because markets are moving sideways. I want to spend some time to talk about tZero. This has been something that has been talked about for well over a year now. I remember hearing about this back during the craze in 2017 and in the early parts of 2018 as they were starting to work alongside regulators to make sure everything was operating soundly. A lot of people have been trying to create security token platforms. They've been trying to kind of get on this bandwagon of security tokens, and it's the next big buzzword. As you all know, if you probably watched me a little more actively, I'm not too extremely excited about security tokens because I believe that regulation keeps it from really reaching its full potential, and that would be democratizing capital, allowing people to own partial share in real estate, partial share or small equity ownership in amazing startups that might become the next Facebook. This would be great, right? Well, the problem with a lot of these exchanges is that they're solely for accredited investors. So most of you out there who are watching, probably don't fit into the category of credit investors. Not meaning that as an insult, but there's a lot of you out there who are. But it's a hard standard to meet for most people. It's pretty much 1% of the American population. And that cuts out a lot of people from getting to invest in these securities. But nonetheless, I think Overstock.com being one of the first e-commerce websites, as well as Patrick Byrne being at the head, really big I have a big admiration for Patrick Byrne. I'd love to get him on the Dashcast sometime because he's very, very logical. There's a really great interview he did with Naomi Brockwell, and I've been watching him back for years. He's done things on like Big Think, which is a big YouTube channel where they do like short interviews with people, but nonetheless, I have a high respect for him, and I think that they're going to do a great job with tZero. Now, in regards to talking about the current state of things, the exchange just launched, I think, yesterday, if I'm correct. I'm looking at the dates here. I went on the platform, and you have to register for a profile. I didn't actually go through and really take a look at the user interface and how everything's operating, but it seems like things are going quite sound. Here on CoinDesk, they've actually gone through and actually tried toying around with the exchange, signing up an account. But the major thing that I want to talk about more than anything with tZero here is a potential opportunity, right? I know a lot of people out there will not be able to trade security tokens. I know a lot of you out there might not care really so much to trade them, even if you can. For me, again, like I've mentioned, I think there's a potential for this market, and I think there will be a little bit of short-term speculation and hype around it. But what I'm more excited about is something that I think would be a potential opportunity. Now, again, you guys have to determine for yourself whether or not you want to do this, but I've been keeping an eye on Overstock stock because this is something that, for example, my dad, who's he's more into trading stocks, and I know a few other people as well who don't really dabble in the crypto space, but love to try to trade the kind of waves of excitement that come in. One thing that I'm really excited about is that Overstock stock has come back down to the levels it was at back in the summer of 2017. So it's cut out all the craze of the crypto mania. I think this is an interesting time to keep an eye on Overstock. Now, I'm not saying it's time to buy it yet or anything like that. Again, you guys got to determine these things for yourself. I'm not giving financial advice. What I am saying is that this is an interesting level. We've cut out all of the craze in the price, right? We've gotten out of that euphoric late 2017, 2018 period for crypto. And a lot of blockchain crypto equities are quite cheap right now. So I'm keeping an eye on it right in this case. If we start to see some momentum pick up, if tZero starts to get more coverage, if they continue to bring traffic and volume onto it, I think a lot of excitement will come in because this is a subsidiary of Overstock. That's an important thing to keep in mind. You may not really care so much for Overstock as a business, and you might not think that the market is going to carry Overstock higher like it did back last year for simply accepting crypto. But this is a subsidiary under it. You can see Patrick Byrne is taking his time to focus on tZero at the moment. He's putting a lot of focus into it. And I think he's a great guy to be leading this up. Again, one of my favorite, he's not heavily known, for example, like Jeff Bezos, because Overstock is a little bit smaller. But Patrick's a really intelligent guy. So I recommend you check out some of his videos, learn about, what tZero is trying to achieve. I think they're one of the better positioned players in this space in a very competitive field for security tokens, which is going to get more and more competitive over the next few months. So again, it's one of the few publicly traded opportunities that are going to offer that. That's why I believe it's probably something to keep an eye on. But anyways, best of luck to Patrick, best of luck to Overstock in this case. And if you guys want to, I think you're welcome to explore the platform, but you won't be able to trade anything unless you're an accredited investor. So again, regulators really need to catch up with this. The tech is there, regulators need to catch up. Alrighty, so let's go ahead and jump over to equities here in regards to Singapore. This is a very interesting case. We've seen flash crash style events not only in Western markets in the United States back in May of 2010, which was more of an actual active market flash crash that got a lot of people worried. But this one should also nod some heads as well. This was a $41 billion drop in equity valuations at the open of the market. And we'll go ahead and I'll bring up the chart here. This is it right here. So basically, this is a chart here of Jardine Matheson. I hope I'm pronouncing the name right, but I'm assuming one of the major publicly traded stocks. And you can see here how the shares went all the way from around, I'd say, $67 down to a little bit above $10, probably around $11, and instantly leaped back upwards. Now, a lot of people, I don't get this kind of narrative, and this is the narrative that they did spin at the Singapore exchange. They basically went about saying that people had time to exit their positions, that they had, it was only for a short period of time, and we're not going to reverse trades, and this is completely fair. But the thing is, people don't realize, and I think the people making these comments, that there are stop losses that people set in these markets, that there are, there is a little bit of a shock that comes when you see shares plummeting 80 to 90%, right? That I would understand if someone felt they needed to sell, and then they might argue later, oh, wait a minute, that wasn't accurate because the price went right back up. And this is, again, an issue with equity markets. We find this a lot. Well, basically, they're saying that they're not going to be reversing the trades, and there was a few people who traded. So let's go ahead and read. This is one of the quotes here from the Bloomberg article. The extent of the price plunge was certainly out of the norm, one that had folks questioning if it had really occurred. The rapid movements unfolding in the early hours of the market open could have enabled this to slip away. So they're saying that pre-market trading was leading to this. And usually that can happen, but more than anything, you would need something from what I can analyze that would have cleared all of the bids on the order book, right? And it doesn't make much sense to me in this case that this would happen. And we've seen something similar in Hong Kong. We've been seeing this happen a lot in Asian markets as we've started to get into bear market territory. Could be a question of liquidity, but again, just seems fishy more than anything. And this is the sad part. The exchange, which insists on upholding the trades, says that the sellers had more than enough time to withdraw all the sell orders if they were not satisfied with selling at such a low price. Not everyone has that opportunity because some of us have stops set. At least 3 prime traders recorded significant losses as they rushed to sell off their holdings when the plunge took place. On the other hand, more than 12 counter traders snapped up on the temporarily cheap shares in the process, recording record profits of 75% by the time the market opened and Jardine Matheson stock rebounded to its normal price. See, this is the stuff I don't like. Again, I'm a big free market guy. Free markets are one thing. Equity platforms and trading markets are a whole nother basket. It's the reason why I think a lot of people say, there's no need for regulation. There's no need for people to step in. I say BS when it comes to stuff like this. Stuff like this happens from time to time. A lot of people lose very bad, and a few people make a lot of money. This kind of dirty stuff happens all the time in developing economies, but it also happens in the United States as well. It's less sudden in this case. But again, I think in a market where you have people using stops and are thinking more long term for things like this that are completely out of fundamental reality and look completely manipulated. I mean, this is just unprofessional in my opinion. But then again, I think what they're thinking about in this case as an exchange is, hey, are we going to discount the people who took upon this opportunity and the risk to buy it at those prices? Again, you could play it both ways, but I think more than anything, that's really not a fair market. But then again, markets aren't fair, I guess. So, we talk about crypto markets being underdeveloped. Man, that's really unprofessional. All right. So anyways, very interesting story here. Big flash crash for a market like Singapore in this case. Want to go on and spend a little bit of time talking about an interesting data point that I found across as I was looking at the daily shop brief here. And it's basically a recession indicator. So I'll go ahead and I'll zoom in here. The window's a little bit small. But basically, it's an indicator that scans across company earnings calls. So as you all know, every quarter, companies go through earnings calls where they talk about the business and looking forward. And it's the percentage of earning call transcripts and presentations, including the terms recession and words like nearing or possible as a combination with recessions. And we can start to see as we've gone out of 2018 to 2019, this has started to spike up. And it's starting to get into territory, that to be fair, we've seen well before recessions. But it's definitely looking like we're starting to hit into a parabolic uptrend as we saw back here in 2008. So very interesting. I'm surprised actually that only went up to 10% actually during recession. That's the thing I'm kind of blown away by. But nonetheless, you can start to see the trend is shifting, fear settling in, guys. And I don't think it's, again, I'm not trying to sell it like it's going to be 2008, but we're definitely hitting a period of fear. So very interesting thing I thought I would toss out to you guys. Alrighty, so going on to cannabis markets, as you all know, from time to time I'll talk about it. Cannabis markets, since we last really talked, have not moved too dramatically. We were discussing it in our recent video, talking about the cannabis revolution. Looks like the chart isn't loading here. Let me go ahead and refresh it real quick, see if I can get it. But basically, I mean, markets haven't moved too much at the moment. The major thing I'm watching for, I don't know why my chart's not loading up here. Maybe we'll load the global cannabis stock index. There we go. Alrighty. So over the past week or so since we talked about cannabis stocks, we've started to see that prices have started to come back up towards the higher band of the recent bump up in the market for cannabis stocks. I think, honestly, the max you're going to see the index go to, right now we're sitting at around 81.78. I think it's going to go to around 84.85. And the reason I say that is because this is the point where it was previous support here around 86 and 84. So I think you're going to see previous support turn into resistance as we start to go in this downtrend. But the longer term trend here is more than anything, it's a game of waiting for this to slowly bottom out here around these lows. Anytime I see price coming around here, I'll consider probably doing some trades on cannabis equities. But again, picking up ones that are cheap and not too overextended, because there's a lot that are overextended. I think Kronos Group is overextended. There's a little too much hype rallying into some of these publicly traded cannabis stocks. But look for the ones that are cheap, but at the same time aren't completely dead in the water, dead without liquidity in that case. So that's what I'm watching for. We'll go ahead and take a real quick look over equity markets. It's about 3 minutes until stock exchange will open up in the United States. Interestingly enough, we're holding on the 50-day right here. I think this is giving a case for the bulls in the short term. My main thesis right now, guys, is that throughout January, we're going to see a continuation of this uptrend. The market right now, I think futures are up a little bit. Could change since I last looked. Could have changed since I last looked at it. But I think we're going to come up, test this line of resistance, and look, you've got the 100-day coming down. Not to mention, 3 times we've gotten way down at this level. It's a matter of playing your odds, right? I'm much more on the thesis that this is probably going to hit resistance quite heavily, as we've seen the past 3 times, and this is going to start dropping quite quick, and it's going to break to the 50-day and test back down towards this range. So we'll have to see. Again, I'm seeing much more ease towards breaking down and a much harder time to the breakup on the upside in this case. You would need some huge news. You would need a confirmed trade deal to come through for the United States. You would need to hear the Fed talking about pulling back quantitative tightening and lowering interest rates, or saying that they're not going to be raising them anymore throughout the year. But even with that, it would be hard for me to believe that this is going to go much higher. We've had a lot propping up equities this month. We've really had 2 major things, the biggest one being the restructuring of pension funds, which had a huge buy-side pressure for equities. And obviously, we've had the stock buybacks as well. But we've also had the increase in the central bank's liquidity in regards to the balance sheet. They've increased their holdings on assets, which provides buying relief for markets, right? So again, I think you guys, all you have to do is look at the assets that the Bank of Japan owns, the massive stake they have in their ETFs, the propping up that the Chinese government has done for Chinese markets, even as they continue to dwindle. In this case, this is why I talk about U.S. markets being a little bit stronger than most at the moment, because as they've been able to rise interest rates, equities have still held relatively well. But I don't think we're going to be splitting off. I don't think we're going to be splitting off from the world in that case. I think we're going to be following the trend just a little bit behind. And I think that'll start when we get towards the latter part of January. So in summary, January, it's going to continue the rally in this case. Very short window of time left, just a few trading days really. Outside of that, February, I'm believing there's going to be more blood. That's where I'm putting my money at the moment. But anyways, that's it for the video, guys. Thank you all so much for watching. If you guys have anything that I didn't discuss and you want me to cover in the next video, please leave it down below in the comments. I always love getting feedback from you guys. And if there's any opinion that you have on the topics we discussed, feel free to leave it down below. Love to hear from you guys as always. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.